my name's Buzz Hill, and today I'd like to give you my 2 cents on why I'm buying China Direct Industries, symbol CDII, which is a NASDAQ stock that today, on October 13th, 2010, it's currently trading for $1.42 per share. Now, I put in a buy early this morning before the market opened at $1.35 because I was looking at yesterday. It had a slight red day, went down as low as what is it, $1.34. So I put it in at a penny above that. Unfortunately, it opened at $1.36, so I missed it by a penny. And you may look at this has been in a long downtrend. This is a 9-month stock, so for at least 8 months it's been going straight down to the floor. However, it's now in a short uptrend situation, really from about probably about 9/10. So for a little over a month, it's been in an uptrend. So the main reason that I'm looking at buying this is, one, I've got two moving averages on this chart. One is a 25-day, which is the green one, and the gold one is a 75-day. They're not the typical 30, 90-day ones. I use these because I like them because they give me a little jump on everybody else using those 30 to 90-day moving averages. Now, as you can see, it crossed on 10/7. The lower moving average, or faster moving average, crossed the slower one. So the 25-day moving average actually crossed up across the 75-day moving average. That is officially, as far as I'm concerned, the uptrend. Now, I do use other charts and I use other moving averages, but this is the one that I buy off of. When I see a stock that has recently, and I mean recently, if it was 3 or 4 months ago, I'd be leery about buying it because it may have already exhausted itself. But right now, this is in an official uptrend. The slower moving average now is below the faster moving average, and that's what I use as a official uptrend mode. Now, as you can see, it's went up to $1.43 today. It's up 5 cents. Unfortunately, I missed it by 1 penny from getting into it, but I think tomorrow it still hasn't. It seems to be hitting a real mini resistance at about $1.43, $1.44. Seems to have a problem getting past that, and I think tomorrow it'll probably fall back down again. I may raise my buy from $1.35 up a couple of cents to say $1.38. I always hate chasing these stocks, because no more will I buy it for $1.38 and then it will go down to $1.31. But because it's above, it's definitely a buy. I'm just trying to make it come to me rather than me go to it. I also use now I'm using Thinkorswim software from TD Ameritrade, and they give you 2 charting programs with that. You also get the profit charts, which I use a lot more indicators, such as the MAC and the scholastics and stuff like that. Now, as you can see, they're up into above 75% on scholastics, so they're in an uptrend for sure. Now, sometimes these uptrends stay there, and they can go on for a month, and sometimes they can turn right around and go down. The reason I think this one may be up for longer is because it's been down for so long. Now, one thing, it's slowing down a little bit because the 3-month average daily volume is 261,000. Today, there's only 160,000 shares being traded. The MAC is a little weak. I still think that this stock, it's now going, because it doesn't deal in gigantic volumes. It's not millions of shares or anything. The average volume only being 261,000. If you saw all of a sudden 2 million here, the MAC and the volume and everything would jump right through the ceiling. But it's not a big volume stock. The reason I like CDI is that I read up on it, and they are a company that is actually managing owning or have a majority ownership in like 6 companies in China that sell magnesium. And magnesium isn't going anywhere. They need it in cars, airplanes. It's a lightweight product, with fuel concerns and stuff. There's going to be more magnesium used in cars because it's actually lighter than aluminum, and it's got a good strength factor. Uh, you know, it's a product that it's a commodity that's going to go up. If the dollar goes down, commodities are not going to go down with it. They're going to go up anyhow because they're a actual product. So I don't know. And they do have an office in Florida. So they have a U.S. office to sell their products here in America, even though all of their plants are in China. If you read up on them, they seem like a pretty good deal. And I'm going to go ahead and take a chance. Now, I try to put everything in my favor. Obviously, would I have bought it here? No, that's a downtrend. This is on an up channel, and it's looking like it could keep going for a while. Actually, I kind of like the 45-degree uptrends because unlike the 60 or 70 ones, which kind of just go straight up, they tend to last longer. The ones that just all of a sudden the stock pops way up like this, the very next day it goes way down like this. And so it's really like riding a roller coaster. They don't last very long. I mean, every once in a while you see one pop up and then it'll go sideways for 6 months. I kind of like the ones that go up on a daily basis. Even if they only go up 2 or 3 or 4 cents a day, that's fine with me. And as long as they don't back up and go down below. This one is not a big risk stock. I'm going in at $1.35. I'll probably put my stop at $1. So at 100 shares, I'd be losing $35 plus my buy and sell fees. So I'd be taking a loss, but it's not a gigantic loss. And this stock definitely has the potential to double or triple or quadruple, especially if you do hold it a long time. It may never see this low down here of 95 cents again. So, it could be, or I should say 86 cents was the low. It may not get to that for 3 or 4 more years again. However, here's what I do when I do buy a stock. If you notice, my green 25-day moving average right now is pointing up. When that turns to a flat, say like this is flat, when it turns and starts going sideways, I really pay attention. If that thing even takes a slight dip, like right here, where it started dipping down, I sell. I don't wait for it to keep dipping down, keep dipping down, keep dipping down, and all of a sudden all of the profit you got is gone. In other words, watch that green 25-day moving average. When it flattens off, it's buyer beware, and unless it turns back up, if it starts to make any kind of a little hook down, get rid of it, because you can buy it again. That's the beautiful thing about stocks. They never run out of them. You can always buy it again 3 weeks from now when that green thing's back up again if you want. Don't fall in love with it. Anyhow, that's my advice to you. This stock, has, I feel, a potential of a 3-bagger within the next year or so. And it possibly, if you were to hold it longer, could even be worth considerably more than that. I may add more shares as we go. I'm starting out small. I always believe, don't bet the farm. Just put a little money in, see what happens. You can always also add more shares if once you become more familiar with it and you know how the stock's moving. Anyhow, my name's Buzz Hill. I look forward to giving you tips on my 2 cents of what I'm doing on stock. Oh, I forgot to tell you too, one of the biggest reasons I'm buying this is not because it has an earnings per share of minus 86 cents, which is terrible, but it has a book value of $1.61, and currently it's selling for $1.41. So anytime I can buy a stock that's under book value, I like to buy it, and especially if it's in an uptrend and under book value. So anyhow, my name is Buzz Hill. Please leave your comments in the comment section. I'd be happy to hear from you. Give me your suggestions and tips. I will reply to most of them, and I look forward to giving you more of my 2 cents and hearing more of your 2 cents. Thank you very much. Bye-bye.